General Manager of Medium Density and Completed Homes at Peet. I'm joined here today on Facebook Live Chat with Matthew Purcell. He is the Senior Finance Broker and a Director of Elite Finance Australia. He's here to answer all of your first home buyer questions today. It can be a bit of a daunting experience buying your first home, so hopefully we'll be able to make it slightly less scary for you. Welcome, Matthew. Maybe you could start by telling us a bit about yourself and a little bit about Elite Finance Australia.
Yep, thanks Michael. I specialise in first home buyers and construction finance. Being the Senior Finance Broker and Director of Elite Finance Australia, I've been doing this for a number of years. I see myself as more of a first home buyer coach, trying to help the process be as nice and simple and smooth, as easy as possible for the first home buyer.
Sounds like you're the right man for the day.
Thanks, Michael.
So while we wait for a few people to join us and get some questions coming through, maybe you can start by telling us where first home buyers should jump in. They've obviously made the decision to buy a house. They might be at home with mum and dad or renting or something along those lines. Where do they start? Who do they need to talk to?
Yeah, it is a very daunting process. The first place to start would be to see a licensed and accredited finance broker to look through certain things such as your borrowing capacity, what deposit you'll need, and all the other information you need to know about repayments as well. So seeing a finance broker, we can go through that, look at your personal financial position, and then give you some advice and tips to try and make the process as nice as easy as possible.
Great. Are there any sort of questions that jump out in mind when you first meet a first home buyer? What are the key things they ask you?
The main things they generally ask is, how much deposit do I need? Is there low deposit options? What are the different options for deposit? They also ask what sort of repayments they'll be expecting to make too, because a lot of them are either boarding currently or they've got rent that they're paying. So they want to make sure that the repayments are very similar or in line to what they're currently paying.
Right. And coincidentally enough, looks like one of our first questions is exactly that. How much of a deposit do I need to buy my first home?
Yes, so when I do get asked that question, we do have multiple options. There is a low deposit, a no deposit, and a standard deposit option. So it depends what you qualify after looking through your personal situation. The low deposit can be as small as 1%. So it's a very small deposit. There is a lot of requirements to go through and stipulations to get there, but there's definitely a 1% deposit available if you're in WA. We also have no deposit, and that basically is when we're using parents as a security guarantor. We can structure the loan in a certain way so that you don't actually have to pay a deposit as such. And the third option is your standard deposit, which most banks have. They always like 5% genuine savings, but then the deposit's anywhere from 5 to 20%, depending on your circumstances and depending on what rates and products you want.
And of course, with rising prices around the country, that deposit's getting harder to save for, isn't it?
Correct, yes, yeah.
Another question coming through, what fees should I budget for?
When you start out, the best thing to do is get a total cost analysis from a licensed finance broker. With that total cost analysis, it will cover all the different fees that you need to be aware of. Things like settlement agents, which is a major one, which a lot of people forget. Generally could be anywhere from $2,000 to $3,000 to $4,000 that you need to budget for that. The banks also have all different sorts of application fees and fees that you need to be aware of as well. And also, once you move into your house, then you have to be ready for other costs, moving costs and things like that too.
And important to remember, isn't it? Because $5,000, just listening to you then goes very quickly, doesn't it?
Yeah, it goes very quickly. So with that total cost analysis, it'll break it all down for you nice and easily, so you know exactly what you need so that there's no surprises later. There's nothing worse than getting all the way to settlement and then being short a couple of $1,000s because you weren't aware that there was some settlement agent costs.
Fantastic. Look, if you just joined us here, my name's Michael McNamara with Matthew Purcell. He's a Senior Finance Broker and Director of Elite Finance Australia. He's answering all of your first home buyer questions here today. You can join us at peet.com.au/Facebook Live. You can, of course, follow us on Facebook at Peet Communities as well. Matthew, one more question that's come through. How much will regular repayments be, and should I pay weekly, fortnightly or monthly?
Yeah, that's a great question I get asked a lot. There's a lot of people who've got the stigma that fortnightly is the best way to pay, but actually I believe it's best to pay in line with your pay. So if you're getting paid weekly, you'd pay weekly. If you're getting paid fortnightly, fortnightly, and monthly, monthly. You don't want to be holding on to extra payments for an extra fortnight when you don't have to. You want to try and reduce the interest as quick as possible. You also need to remember that through the whole house and land and construction process, that the loan repayments be interest only, and they're generally always paid monthly. Once you actually move into the home and it's established, then you can choose and have a lot more flexibility. The loan will also be principal and interest at that stage, so you start paying it down over the next 30 years.
Right. Next one that's just come through, and this is a classic for first home buyers. Can I get the first home buyers grant? And bear in mind we're talking to a national audience, so it's different in each state.
Yeah, the first home buyers grant is a great way to get into buying your first home. It varies from state to state, but in WA as such, it comes in two parts. So when you're buying a house and land package, you'll get a 10,000 that can use as part of your deposit. It's not part of your gen savings, but it can be used in your total cost analysis as part of your contribution. You also get zero stamp duty fees if the land is between 0 and 300,000, and 300 to 400,000 is a slight discount, and if you're over 400,000, there's no actual discount. You pay full first home buyer stamp duty. So it's a very good incentive for first home buyers to get into their first home and take full advantage of this grants while they're available.
And can that count towards the deposit, the first home buyers grant as well?
Yeah, it can. Most banks will look at having a 5% genuine deposit, so you can't use it as part of that because you haven't actually saved it. The grant you generally get after the first progress payment or the second one. Different banks do it slightly differently, and it comes from the Office of State Revenue. So you haven't actually saved that deposit, so you cannot use it as part of your main 5% gen savings. But with a total cost analysis, we can work it out, and it can be used generally to cover your settlement agent costs, your bank costs, and a little bit towards your deposit as well.
And of course, those numbers vary just slightly state by state, don't they? So I guess if you talk to your finance broker, they'll be state-based, they'll talk to you about specifics within that state. Next question that's come through, how do I choose which bank and loan to go with? That's a big question.
Yeah, that's a very big question. As a licensed accredited finance broker, that's something that we help and assist you with. A lot of times people have been with a certain bank for a number of years and they would like to go with that bank. So the first thing we do is we check through your personal scenario, check the time of your employment, check your income and check your deposit and all the other variables to make sure you fit that bank's policy. We go through, if you do fit that bank's policy, then we show you a number of range of products and different rates and prices as well. If you qualify for multiple, then it's great. Then we've got a dashboard of different lenders and products that we can try and help and assist you with. Show you the difference between each lender's products and their technologies and things as well.
And of course, those lenders' offerings are changing frequently, aren't they? You've got the dashboard, 1 week to the next, 1 month to the next, what they're offering could vary.
Yes, correct, yeah. At the moment, some banks are putting their rates up and some putting them down. So it's a daily struggle that as a licensed broker, we're looking at all these changes happening on a daily basis. So often with a plan, I'll see a customer at the start and I won't commit too far in advance to a bank until we get closer to actually lodging the application. Because those rates could change, they could introduce new products, there could be new incentives, a lot of things can change.
So once again, my name is Michael McNamara, this is Matthew Purcell. He's a senior finance broker with Elite Australia, a director also of Elite Finance Australia, I apologise. He's answering all your first home buyer questions here today. You can find us at peet.com.au/Facebook live chat, or of course on Facebook at Peet Communities. A couple more questions coming through from some viewers, Matthew. Should I choose a fixed or variable rate loan?
Okay, that's a great question because a lot of people are uncertain of what's going to happen with the interest rates. When doing a house and land package, we're limited to the amount of lenders that we have available to start with. There is some that will actually do a fixed rate loan as well through construction. There's not many, but if you fit those qualifications, then we can have a look at that option for you. Most lenders will do a variable rate though through construction as the loan will be increasing as you go through the progress stages. So with that, we have a look at different ranges of variable rates, and then once the house is finished, you then might choose to fix a rate if you're still uncertain on what could happen in the future.
Yeah. So you've touched on a key point, construction loans versus buying an established home. Of course, if you want your first home buyers grant, generally you need to buy new or under construction. Do you find a big difference between construction and established as far as the offerings from the banks?
There's not too big a range, it's just the selection of banks available is a lot less for construction loans. We don't have as many options available. Not all banks can handle the whole construction process as well. So,
which is where your broker's knowledge becomes key.
Correct.
Another question from this viewer is: what is a lender's mortgage insurance? I apologise.
Yeah, lender's mortgage insurance is a big thing that a lot of people talk about, and there's a lot of scare around it. Lender's mortgage insurance is a premium that the bank charges, and they add on top of your loan a lot of the time, or they capitalise it. It's an insurance premium that covers if you default or if you start not making your payments and the bank has to recover their costs. So it can be seen as a bad thing, but it's also a very good thing too, because it enables people to get into their first home without a 20% deposit, which is a big hurdle these days. It's very hard to save a 20% deposit. So I actually see it as quite a good thing. Now, it does vary from lender to lender as well. So it's good to see a licensed broker. We can show the differences in LMI from one lender to another and go through it all with you.
Yeah, it's a big number, 20% on the house price.
Yeah.
These days, isn't it?
Yeah.
So a crucial part of the
Correct.
of getting your
Correct.
first home really is the mortgage insurance. There is a question here which is very pertinent in this day and age, given what we've just discussed, from a parent who's asking whether or not they can use the equity in their property to go guarantor for their son, and then goes on to ask, of course, what are the key risks that are associated for them?
Yeah. Guarantor loans are becoming a very significant part of lending these days. It's increasing all the time as lifestyles are changing and the way that property prices are increasing as well. That deposit is becoming increasingly harder and harder to achieve. So a lot of the time now, it's good to see a licensed finance broker as soon as possible. We'll then sit down with the customer and also the parents at the same time and just go through the very basics to see if there's even an opportunity to do a security loan. Generally, the parents would need to have a property and either have it unencumbered, so no finance on it, or a very small loan on it too. So there's plenty of equity that we can use to help with the guarantor loan. As far as risk, it's worth seeing legal advice if the parents are worried about it. But the banks go through a lot of processes as well to ensure that the customer's parents are even applicable to try and help and go through that loan in the first place.
There'll be a lot of happy parents out there, potentially. Maybe a lot of happy kids based on that advice. Yeah. We've probably got time for one more before we wrap up for the day. Do I need pre-approval before I go looking for my house?
I believe that would be a very good thing to do. If not a pre-approval, at least see a licensed broker and they can provide some kind of confidence for you that you can start looking. The main things to do is to see what the repayments are going to be, to see if you can actually afford it. So just because the bank might say that you could borrow $1 million doesn't mean that you can afford it and you want to borrow $1 million. And vice versa, you might only be able to borrow $300,000. Don't go and start looking at property at $400,000 because your expectations will be drastically different.
I'll probably squeeze one in, I think. Let me just open that up. Does a broker help with my personal budget? Good question.
Yeah, very good question. A broker can guide you and they've got some forms and information they can give you, but it's best to try and do your personal budget yourself, to go through all the information, look at your living costs, look at your expenses, and after your net income comes in, see what you've got left over to put towards a budget or a savings budget.
Yep. And it's probably important to make sure you don't over-leverage yourself in these
Correct,
circumstances.
yeah. You always want to leave some buffers as well, emergency just in case.
One interest rate change and all of a sudden things become slightly more difficult. But okay, we'll do one last question and then I'm going to ask you to tell me what you think we've missed here today. So that was an advance warning for you, Matt. Are brokers aligned to banks? Good question.
Yeah, very good question. So no, brokers are accredited through banks and you can be accredited to multiple banks. Generally, a lot of brokers are accredited to up to 30 different banks. So as a licensed finance broker, it's our objective to try and look through each customer's personal scenario and situation and then try and find a correct solution for them. We always want to try and think of the best interest for the customer because we want to get referrals back from the customer. So it's in our best interest to look after them so that we get a good positive result and everyone's happy and we can get some more business.
And of course, you have the capacity to look across all the banks, don't you? Which is the
Correct.
substantial difference between going to a broker and going straight into one bank.
Yeah. So the major difference is if you just go into one bank, then you're limited to the products and the policy that bank has. So if they only have a 10% deposit, then you'd have to have a 10% deposit to go to that bank. And that can become quite difficult if you feel like you've been banking with that bank for 20 years and yet you don't fit their policy. The main thing you want to watch with banks as well as far as your credit inquiries. So you don't want to keep going from bank to bank putting credit inquiries in to find out that you've been declined. Eventually you might go to the fourth bank and just because you've been to 3 others beforehand you might get automatically declined even though you weren't declined with the previous ones. So it's very important to make sure you get the right advice and find the right product from the start so it doesn't hurt your credit file.
We've covered a lot. I can't think of something that we haven't talked about. Can you?
No, I think we've covered a lot of topics today. So
any key tips that you give people just as they're heading off to look for their house?
Yeah, so there's probably 3 key tips that I like to try and give to people when they want to start the process. One is the genuine savings. It's a major thing that you need to get right from the beginning. Now, most banks want 3 months of genuine savings. So the best way to do that is to, one, either have a separate bank account and slowly increase from your pay into that account, or 2, get a lump sum, a gift, sell an asset, and sit it in a separate account and leave it for 3 months without touching it. Now, it's very important you don't touch that money and it actually sits there or it increases. The minute you dip into it, it's not considered genuine savings, all of that money. So you just need to be very diligent and try and keep it away. A good tip for keeping it away is to potentially go and open another bank account with another bank that you don't actually bank with. Then it's a bit further out of reach. You're not likely to transfer the money back and forward. So that's a really good tip. Another good tip is you could even ask your work on your pay slips to transfer a small portion to another account. Then the same sort of principle, have it with another bank, you're not likely to dip into that account too. So that's one of the big tips for genuine savings. Another tip too is on your credit file, is be very careful. I did touch on this just before, but another thing is don't go applying for car loans, personal loans, before going for a home loan, because that could affect your chances of getting approved on your home loan. Now, don't shop around too much with cars as well. I know a lot of people are tempted to do that, and there's a lot of car yards that will try and help you, but just be very careful because your credit file is very important when applying for a home loan. The third tip is to see a licensed accredited finance broker. Go through the total situation with them, what your plans are, short-term, medium plan, and long-term. And also make sure they do a total cost analysis for you so you know all the costs that you could be up for in the long run.
That's good advice. Very good advice.
Thank you.
I must admit, that's something we've seen in the industry over the years is people going and applying for cars and that affecting their credit rating and not realising quite what they're getting into. It's something I hadn't thought about. It's really quite key. Matthew, that's fantastic, and we really appreciate you taking the time today. I think you've really done a lot to demystify first home buying for everybody who's watching. I think that if you want to know more, then you can talk to someone like Matthew or an accredited finance broker. You can, of course, find us and watch this video again for more information at peet.com.au. Please follow us at Facebook at Peet Communities. And, of course, if you really want to talk to somebody other than someone like Matthew, you can go into one of our local communities. Peet has projects all around the country, and talk to one of our sales people. They'll help you too. Matthew, thank you once again. Really appreciate it.
Thanks, Michael, for time.
Thank you, and goodbye for now.